My favorite theme as an investor, and I want to segregate between investments and speculation. My favorite theme as an investor is still oil and gas. Um, Biden saying you need to drill more, but I'm going to make sure that your business is a stranded asset by 2030 sort of means that the type of investment that he would like to see isn't going to be sufficient to make sustaining capital investments, which means that the supply of oil and gas is going to continue to be constrained for most of my life, unless we come into a real recession. The speculator in me is very different. With the speculator, I'm looking at more, or pardon me, a less certain upside, but a much more dramatic upside, and that has to be uranium. I've, as you know, Arash, been pounding the drum from time to time on uranium for a very long time. I was in it in 2015, 2016. I was out of it in 2021. We have a circumstance now where the stuff is priced at $47 a pound. The global incentive price for current production is about $60 a pound. The global incentive price for new production is probably $75 a pound, which means I'm relatively certain, absent a global depression, that the price of uranium over 5 years goes from 47 bucks to 75 or 80 bucks. That in and of itself is not a bad internal rate of return. In other words, you could buy the Sprott Physical Uranium Trust and just participate in the upside of uranium, which I think is more or less certain, absent global economic catastrophe. Or you could construct a beta account, which is to say the biggest and the best uranium companies worldwide, which you think will substantially outcompete the other equities markets available to you. Or you could construct an alpha account, which is to say you come farther down the quality trail to what we believe are the 12 uranium juniors that are viable out of the 75 listed uranium juniors worldwide that we can track. And I think all of those work. So as an investor, I want to be in the oil and gas space. You know, companies with 12, 15 years of proved developed reserve life that are trading at 3 times cash flow, generating 50% operating margins. I mean, it's just, you know, there's a reason why Buffett bought 22% Occidental, why he filled his boots on Phillips, why he filled his boots on Chevron. These stocks are stupidly cheap. So from the investment side, I'm in the oil and gas business and happy as a clam. As a speculator, the uranium stocks have fallen like a boulder off a bridge at the same time that the pace of Japanese restarts has increased, which is to say the upside in uranium has become sooner rather than later, while the stocks are off by 50%. It's a wonderful circumstance for a speculator.
And as a speculator in let's say the uranium stocks, and you know, you guys did that uranium masterclass recently, and there was the symposium, the in-person event that you had. What are you finding the sentiment to be with the rest of investors? You know, you're dialed in, you're convinced, but yeah, where do you see the retail market being on this?
Please note that my investors are a self-selecting list. If you hang out with me, you're going to have a sense of humor for uranium, or you're going to stop listening. Most investors, even those who consider themselves contrarian, aren't. They want to be contrarian when it's popular. Yeah. They're momentum investors. So I remember being vilified on social media a year ago saying that the uranium stocks were overpriced. Now the uranium stocks, the juniors, have fallen by 50 or 60%, and all of the people who vilified me are saying that uranium stocks are overpriced, having fallen 50%, just at the time I'm getting back into them. I'm extremely comfortable with circumstances like that. Buffett says you make money by buying straw hats in winter, by buying assets when they're out of favor. So the fact that uranium is out of favor, the fact that you can buy a wonderful company and likely see it fall 20% in price in the next month, is a good circumstance for me. I'm very comfortable with that.
Are you looking at anything outside of energy?
Well, I think the gold stocks relative to the price of gold are historically cheap. That isn't to say that they're absolutely cheap, because they never are, but they're relatively the best values they've ever been. I believe, but I can't tell you when, or even really that, we're going to have a gold bull market. I mean, a real gold bull market. I think we're in a hiatus in the gold bull market now. And historically, when gold establishes momentum, silver goes further and faster. And so I'm actively looking at trying to participate either as a private placement speculator or directly back in the junior gold and silver space, having established very, very, very full positions personally in the senior producers, both in terms of silver and gold. Now I'm looking to redeploy back in a sort of a risk-on basis, now that all of my competition is in a risk-off basis. I just, I try and do what the so-called smart money won't.
So yes to energy, yes to precious metals. What about some of the funkier ones, like lithium, even copper?
I'm a sucker for a tier one deposit, and I don't care what it is. Would I be in a lithium deposit if I saw it being tier one being, $7 or $8 billion in recoverable in situ reserves and resources, in the best quartile worldwide in terms of all-in sustaining cost, and in the best quartile worldwide in terms of return on capital employed. I don't care about the commodity. I don't care about the narrative. I don't care about the name. I made a lot of money in sand and gravel and water, so the headline narrative doesn't matter much to me. The project economics and the people involved make a lot of difference to me.
Which goes back to one of your 3 lessons learned. If you're going to aim and put money into this stuff, go big.
Yep.
Because either way, it's the risk is there, so you might as well aim higher. Doug, how about on your end? Are you do you have any favorite metals that you're tracking right now? Anything that just gets you excited, like uranium gets Rick excited?
Well, the number one metal, of course, is gold, and gold stocks really are cheap. And the reason I say that is that the average all-in sustaining costs of gold are very different from cash costs, which many years ago were the only things that people looked at, or $1,000 or so an ounce, about that. But so that's industry-wide for producers. But the market price for gold is about $1,800. And gold is, in my view, fairly priced at this point. So these gold companies are basically coining money right now. So I think they're a good place to be, but nobody wants to own them. The big fund managers think gold is a pet rock, and the younger generation don't want to get involved in it because it's playing in the dirt with big yellow machines. I mean, that's a far cry from developing an app and making $1 billion overnight. So now's a very good time to buy gold stocks.